Hey guys, this is Chris, and over the past few weeks, there have been a lot of new meme stocks to really emerge and take attention in the media, the likes of Clover and Wish stock. But I'm here to tell you about my personal favorite of the group, one that I believe is way more than just a meme stock, where it's just about hype or how many retail investors get into it. I'm talking about CLF stock, all right, Cleveland Cliffs stock. This is definitely one of the best stocks to buy while it is down, and I'm gonna go into all the research. Now, if you're just here to get the name of the stock and buy 1,000 shares or 1,000 call options and go ape that's up to you. You can totally do that. This is probably not the video for you. Now, Cleveland Cliffs is a historical company in the United States. It has been around for hundreds of years. They've gone through a couple name changes recently, but it is definitely a company that is at the forefront of its industry. It started off just with iron ore mining, and recently, over the past year or so, they have revamped the business. They have done a couple of acquisitions to get into steel. Now, that's primarily what iron ore is used to make in the first place. So now this company is vertically integrated. So basically meaning they have a step-by-step part of the business, right? They have the whole process of going from iron to steel and then selling that out. And they have good, very good margins. So when a company has very good margins, they have very good profits. And when it comes to commodities, companies that sell products that are widely available, widely used in a lot of different end products. Like, for example, steel, you make automobiles, you make things that are used in housing, etc., right? Steel beams. Then that really follows the commodity market, right? And when there's a lot of inflation and a lot of demand and not a whole lot of supply, then the price of iron and steel and all that good stuff is gonna keep going, higher and higher and higher. Good thing about this, right, is if you have some pretty static costs, in the case of mining and steel production, that's basically going to be like your machinery and your labor. Then as soon as those prices of those end products rise, like that steel prices, and demand for steel goes up, then this company is going to multiply its profit, and that's what it's doing right now, right here today. All right. Now, of course, if we look at the data, you see that commodity prices do fluctuate. Over the past year, steel prices have almost tripled. But, looking at today's prices here, you look at this chart, you can see that some of these commodity prices may start to come back down. You can see that especially with lumber and corn. Some of those prices were crazy, corn, right? That went up big time. But I do think that there are a lot of good reasons why Cleveland Cliffs can continue to capitalize on rising steel prices, okay? So the big usage for CLF's products is in the automobile space, primarily with SUVs and trucks, right? You think of your Ford and your GM. But because of the semiconductor shortage, which pretty much started early this year, there has been a lot of production cuts at automobile factories. All different companies, even the EV companies and the traditional ICE companies, right? They have cut their productions by significant amounts. So if you go to a dealership, you're not going to find a lot of new cars out there. There's just not there. That's why used automobiles, inflation there is actually increasing pretty dramatically. One of the fastest price increases that we have seen in any consumer product category, right? So I think that as this problem is alleviated, it takes some time to get those chips and put them in cars, and then you can actually start building more cars, because if you have no chips in those cars, not going to work right. So companies are going to start to bring that production back, right? There are some types of product categories or some kind of commodities I do believe will peak or have peaked, but when you see the demand is so limited right now because of the supply, Cleveland Cliffs stock is at the forefront to meet that demand. I do believe, again, you can see here, it is the largest manufacturer of a certain type of steel here that is used for those products. All right, looking at some of those specific numbers here, right? After they've done this transformation to the business, the stock, by the way, the stock has done phenomenally. If you look at the past year, this specific chart at the time it was taken, stock was up 400% year over year. The past 3 years, it's still up. They had some bumps between, obviously a pretty big bump there, and that had a lot to do with the trade war with China and all that, but that has subsided to a very large extent. And if you look at the 5-year chart, it is up still hundreds of percent. And by the way, it is leading all these other steel companies out there on the stock market. So again, number one leader in this space. Okay, when we look at some of these financial numbers though, if you look at their financial outlook, right, they have been increasing their revenues and their income very consistently over the past few quarters, and they've just raised their Q2 guidance and their full year guidance, their full expectations for what this company is going to do over the next, about next 6 months here. 9 months, including the quarter that is just ended. You're looking at $5 billion in EBITDA, earnings before income tax, depreciation, all that good stuff. That's way more than they have made, to my knowledge, in a long, long, long time, if not ever. They've actually been having so much cash right now because the business is on fire that they have been paying off their debt early. Now, the goal here potentially is to be a zero debt company, or at least very minimal amounts. So again, that this is a very well-run, healthy company. It's not going to go bankrupt or anything like that. And going to do well when eventually steel prices will calm down, iron ore prices, all that, commodity stuff will come down. The market, the economy overall is going to stabilize more and reach probably a higher plateau than we started off at, right? It's not going to be like steel prices go up, every single month for the rest of our lifetimes. There's going to be some up times and down times, but right now it is definitely a up time, definitely a rising tide in the economy. The third thing I will say is that when you look specifically, taking into account those rising earnings and revenue, is to look at valuation. And right now, there are a lot of expensive stocks in the stock market. There are some cheap ones too, if you know where to look. And especially if you're looking for the value trade, right? Because I do think that you should have a balanced portfolio. You shouldn't all have growth stocks. You shouldn't just have Tesla or Apple or Facebook or C Limited. You want to have some stocks that balance it out too, because guess what? People were caught off guard earlier this year because everyone's buying growth stocks. Well, sometimes growth stocks can go down for a month or 2 months or 3 months or maybe the whole year, and you want to have something else in your portfolio that gives you some profits in the meantime. Cleveland Cliffs, by the way, trades at a 10 forward PE ratio, meaning that if you take the stock price, it is equal to 10 times next year's EPS, earnings per share, right? Fancy way of saying, a way of valuing a company on its future earnings, right? So the lower the number, usually it means the lower the valuation, the better deal that you're getting. The fourth reason here is going to be that it still has a pretty high short interest. If you do want to play it that way, the Wall Street Bets way, find any shorted company and bid the price up like crazy. And buy call options if you want to do that. But I'm not here to tell you that ape stuff. I will say that if it happens, that's good. It could squeeze. 10% is not the highest short interest I would personally say, but it's happened with other stocks, or at least it gets that traction, it gets that social media boost, and the price may go up. We'll see if shorts actually cover. That's not the main thing here, in my personal opinion, to this thesis. The fifth thing here, and probably the last thing in this video, is going to be the fact that it is starting to come back down. I personally don't like to buy stocks when they are at all-time highs or super high. I want to buy it at a support level. I want to buy it at a reference point where I think that the stock is likely to bounce and then go higher from there, right? And essentially, again, you're getting a better deal. So if you look at the chart here for Cleveland Cliffs, I've marked it here with the trend lines showing how the stock trades over the past several months. You can see that it consistently makes higher highs and higher lows too. So it's basically a rising channel. I did a video on that, by the way, trading the rising channel. You could look that up. And you could see here that it just hit a moving average support. All right, but below that is very near also the rising trend line. So you have a couple of support here that you can play. You can start to add a position here, in my opinion, especially if we get a bit of further growth, stock rotation, and value stocks continue to pull back a bit. I think that at a certain point, value stocks will bounce as well, and the whole market overall will go higher. So this is a moment where you want to capitalize on the weakness, in my opinion. So approximately about $20 a share, I think, is great. 19.5 if you can get it there. I actually bought around there in my Moo Moo account. Link down below if you want to get free stocks. At about $21 per share here, I think CLF stock is still pretty promising. So that's 5 reasons why this is more than just a meme stock, guys. I hope you enjoyed. Make sure to do your own research, of course, and really look into whether this is the right investment for you. I always say invest responsibly. I don't want you to buy anything because I said so, because Reddit said so, because just some arbitrary reason, right? I just think the stock's going higher, so you should buy it. No, it's not in your best interest, and I really want to look out for you guys and make sure that you guys are building out a good portfolio and getting into good stock. So I'm going to continue to monitor this so-called meme stock, and we'll see where it goes. Oh, by the way, okay, the 6th thing that I wanted to say here real quick is that it has very good price targets, CLF stock, and it just recently got an upgrade and coverage from JP Morgan saying it will hit $39 within the next 12 months. That is very ambitious, but hey, it's out there. So $39 maybe. We'll see, again, how it goes. Let me know in the comments if you are going to take this up, CLF stock, as a stock to buy in June 2021. Make sure to subscribe, guys. Until next time, my friends, stay well and invest responsibly.